The question I'm answering today is, what type of investments should a retiree use? And I think this question comes from the standpoint of, should I invest differently when I'm retired versus when I'm working? And that's a very insightful question because, if you just walk down the aisles of your grocery store and you pick up Money Magazine or Kiplinger's, actually, I don't even know if Money exists anymore, but you'll read a lot of commentary on what are the best mutual funds to own and the best stocks, the 5 stocks you ought to own today. And what's bothersome to me about those articles is it doesn't take you into account, your unique situation, your ability to tolerate the ups and downs of the stock market, which some people can tolerate and most people cannot. So what types of investments should retirees have? Well, first of all, I want you to understand the concept that once you are retired, you're no longer adding money to investments. So there's not an advantage to the market going down. When you're working, the market goes down, you're adding to the investment, so you're buying shares cheap. When you're retired and you're taking money off that portfolio, now it's the opposite. You're having to sell more when things are low and sell less when things are high to get that monthly check. So we want to invest, for the most part, in retirement to get a reasonable rate of return, but to spin off monthly income. Think of it as a pension plan. What is a pension plan's job? It's to send out a monthly check to the people that money was promised to. Think of investing that way in retirement versus just for growth, like you may have in your 40s and maybe early 50s. What types of investments? Well, you could use stocks, you could use mutual funds, you could use exchange traded funds, which are a type of mutual fund. You could use bonds, and there are variances within those categories, but I want you to think of investing in retirement more as investing for a reasonable rate of return, but also steady income. So typically people de-risk their portfolios in retirement. Now, I know this gets a little technical. There are subcategories that I haven't gone into. If you have any questions, feel free to contact us. We can help you. We have resources we can send out that explain the different types of ingredients that can go into building a good income portfolio. If you enjoyed this topic and you want to hear more, just click on the link.